we don't have our cameras on anyway.
Okay, thank you. Welcome to this meeting of the Corporate Committee on the 9th of September. My name is Peter Mitchell. I'm Councillor for Woodside Ward and Chair of this committee. I think it would be helpful if we just went around the room and introduced ourselves. So, thanks.
Aisha Simsek, Democratic Services Manager.
Councillor Adele Dogan, Seven Sisters Ward.
Councillor Scott Emery, Muswell Hill Ward.
Shika, I'm in Northumberland Park Ward.
Councillor Joseph Ejiofor, Bruce Grove Ward.
Councillor Ibrahim, Labour Councillor for Knoll Park Ward.
Thomas Skeen, Assistant Director of Finance.
Minesh Jani, Head of Audit and Risk Management.
Thanks very much. We have a number of officers joining us online, and I'll ask them to introduce themselves as and when we get to those items. Do we have any members? Do we have any members of the committee joining us online? I think we were expecting Councillor Rossetti, but I don't see her on the list. Is she? No.
Chair, she's not online.
No. Okay. Thank you. In that case, then, turning to the agenda, item 1 is about filming at meetings. Please note that this meeting is being filmed by the Council for live and for subsequent broadcast via the Council's internet site. The details are set out on your agenda at item 1. Item 2 is apologies for absence. Do we have any, Aisha?
Yes, Chair, we have apologies for absence from Councillor Mark Blake, Councillor Dawn Barnes, Councillor Mahir Demir.
You've also got apologies from Councillor Tabwa.
Thank you. Item 3 is declarations of interest. Do any members have an interest that they need to declare at this stage? Thank you. Item 4 is urgent business. Are there any items of urgent business?
No, Chair, no items of urgent business.
Thanks. And item 5 is deputations, petitions, presentations, questions. Do we have any of those?
None received.
Thank you. That brings us to item 6, which is the minutes of the meeting held on the 15th of July. So are those agreed as a correct record?
Could I just raise a couple of issues on the minutes, if that's all right, please, Chair?
Can we just deal with whether they're correct record?
Well, partly, which is why I'd like to raise an issue on the minutes.
Right. Okay.
Because on the previous meeting, the issue of Black Boy Lane came up, and there were 30 different recommendations by the then corporate committee. My recollection of the meeting, though I don't recall being present, but my recollection of what I've been told about the meeting was the issue was raised about how the council was going to deal with those 30 recommendations and when that was going to come back to committee.
The issue of Black Boy Lane was not raised at the July meeting, but I can tell you the intention is to bring it to the November meeting of the committee.
So it's coming back to the November meeting, Chair?
That's the intention, yes. So but can we just deal with the fact that we're being asked to sign off these minutes as a correct record? Are they agreed as a correct record of that meeting? Councillor Ibrahim.
So obviously mine is on a similar line to what Councillor Ejiofor says. It's not related to these minutes, but you just said it's coming back to the November meeting. What's coming back to the November meeting?
Well, we don't have draft papers for November at this stage, so I'm not able to tell you what's coming back to the November meeting other than it is hoped to bring that issue back. Can we just focus, first of all, please, on the minutes as being a correct record of what took place at the 15th of July meeting? Are those agreed? Thank you. Okay. There were in the minutes a number of action points. There's an action point on Alex House on page 2, which I will come to in a moment. On page 4, there was an action point asking for KC Ikegwu to circulate his briefing, as we had some difficulties with the online connection. Though that was done, it was circulated on the 19th of July. Also on page 4, there was an action point in relation to Alexandra Palace debt. That was not listed as an item for this meeting, so that's something that's held over. On page 5, there was an action point about leasehold flats on Broadwater Farm, and a response was circulated by the clerk at the beginning of this week. And then on page 8, there was an action point about contract waivers, and the clerk circulated a response on the 7th of September. So coming back to page 2, the action point following the discussion on Alex House. Can I just update the committee on that? So this update is on the developments in relation to a possible further audit of the purchase of Alex House. And at the previous meeting in July, there was a discussion on how we take forward the decision of the March meeting of the committee that a follow-up audit should take place. So since then, I've had the opportunity to read the Mazars report, which covers the period from November 2018, when Workspace approached the council to ask if we would be interested in purchasing the building, through to May 2019, when Workspace were informed that the council would not be purchasing the building. I also had access to the Cabinet papers from February 2020, when the decision was taken to purchase the building. And just for the record, I had been granted access to those at the time, as I made a request as a ward councillor for that area. So having read those reports, I then had a meeting with officers, and I made the point that it was important that the council took steps to address the outstanding concerns about how decisions were made. And the corporate committee clearly has a key role here, as our remit, as set out in the council's constitution, includes matters such as making arrangements for the proper administration of financial affairs, monitoring the effectiveness of systems for the management of risk across the council, commissioning work from internal and external auditors, and questioning officers and cabinet members on matters relevant to audit. So the Director of Finance has advised that officers are presently considering the appropriate next steps, recognising the committee's concerns regarding that initial approach from Workspace. So notwithstanding this, I'm arranging for an exempt session of our November Corporate Committee to receive and consider the Mazars audit report on the circumstances around the Workspace approach to the council. And then regarding the later cabinet decision to acquire Alexandra House, I'm also arranging for that same exempt session of the November meeting to receive and consider the exempt part of the cabinet report on which that decision was based. And that includes the business case for the purchase. So we will be returning to this item at the November meeting. Thanks. Okay. Councillor Ejiofor.
Thank you, Chair. I note that this has been an issue of which this committee has taken a great deal of interest. I understand that the audit and risk function is really important. When we get to the meeting, the exempt meeting, a number of former members of the cabinet are currently members of this committee. Will we be able to have to join that particular part of the meeting, or will the legal team say that we should be excluded from it?
My response would be, I guess we'll have to take advice from the monitoring officer on that. We haven't got to that stage of planning the meeting, but so Raymond Prince, do you wish to comment on that point?
Thanks, Chair. That is what I was going to say. We should be able to come to review once we know the shape of the November meeting. So I've got a note, and we'll certainly contact Councillor Ejiofor and others for the meeting.
Thanks very much. Thank you. Okay. Sorry, Councillor Ibrahim.
So can I maybe ask the monitoring officer, would these, you're talking about exempt papers, which presumably we would have had access to at the time that we made the decision. So I'm presuming that this isn't information that we do not already have, that we would not have already have had access to up until now.
Well, it's certainly the case that the papers that went to the exempt part of the February 2020 Cabinet you will have seen. I don't know whether you've seen the Mazars report, but that deals with the first phase. But anyway, both those items will be included in the item for the November committee as an exempt part of that meeting. So if we could then move on to item 7 on the agenda, which is the draft statement of accounts for 2020-21 and the provisional plan for audit, which is on page 11. I don't know who's going to introduce this. Is Casey Akegwari going to introduce this item?
Yes, Chair.
Yes. Would you like to introduce it, and then we'll move to the BDO team. Thank you.
Thank you, Chair. My name is Casey Akegwari. I'm the Chief Accountant of the Borough. The report you have before you is tagged the draft statement of accounts and provisional plan for audit. It's not a decision paper. It's just a fancy way of telling you what we have done regarding the publishing the draft statement of accounts. As you know, the accounts and audit regulation requires us to prepare the draft statement of accounts at the close of every financial year, and at a certain time, and that account has to be reviewed and signed off by the Section 151 officer. So this paper is just telling you that, look, we have done what we are supposed to do under that regulation, and that we published on time by the 1st of August 2021, and that account has been satisfied, reviewed and satisfied by the Section 151 officer. Also, just to let you know that the regulation requires us to have on our accounts audited, the account, the same account 2021 audited by 30th of September, but in the current circumstance due to pandemic and other issues, that time scale is not realistic. I have here the audit partner, the new audit partner from BDO, David Eagles, who will be talking after me and introducing himself, and then maybe having a verbal update on the plans about this. But just to let you know that time frame of 30th September will not be met. For us to complete the audit will not be met. And this report also, just to highlight to you that as contained in the draft statement of accounts, that our performances in 2020-21 has been okay. It's not significantly different from our previous year performance. And also to let you know that what you have here before you, the appended draft account, is just a draft account. Not until the auditors go through it, do their auditing, come up that we'll have a final account that we can talk to sometime based on the timelines that David will be speaking to us about today. We are in the period of public inspection following the publishing of draft statement of accounts, and that period will be ending 10th, which is tomorrow at 4 p.m. So this is a period where people can come in to inspect any aspect of the draft accounts or have queries that we respond to. So we are dealing with that at the moment, and that period will end tomorrow at 4 p.m. So I think at this stage, this is just the update we have for you based on this, and this account has been published. It was published on the 1st. It's on the council's website, and it's also appended here as part of this document. So, Chair, if you don't mind, I will hand over to the new BDO partner, David Eagles, to introduce himself and talk to us about the provisional timeline for the audits of 2020-21 accounts. Thank you.
Thank you. Yes, can I invite David Eagles then from BDO, who's our new engagement partner, to introduce himself and comment on the audit process. Thanks.
Thank you very much, Chairman. So I'm David Eagles. I'm an external audit partner with BDO. I have been involved in public sector auditing for, it's actually my 30th year. I started off as an audit senior on London Borough of Wandsworth back in 1991, so I've been around for a fair while. In terms of my role within BDO, I am the lead regulatory interface partner for public sector work. So what that means is that I'm our representative on the NAO chaired Local Auditors Advisory Group, which is the national level meeting of senior partners from all of the firms involved within public sector work, both local government and NHS. I'm the contact partner with PSAA for the framework that we work with for you. And I also link in with the NAO directly and other sort of senior bodies within the NHS regime. And I have a recent history over the last sort of 5 years or so of working primarily within London boroughs, and also I have a sort of council in Essex, which I also work with, along with a sort of portfolio of other NHS work. So I'm looking forward to working with Haringey and sort of getting to know you over the next few years or so. The short report we have in front of you also introduces a replacement senior manager for Kerry Barnes, who is now within our public sector technical support unit. So Kerry is not gone, but is just on the other side of the fence, as it were. But I'm introducing Lucy Trevitt, who is a senior manager who has also worked with me previously on London Borough audits, so has sort of familiarity with the sort of issues and challenges which you have. But although, of course, each individual borough has a sort of a unique profile and unique issues which we need to get to grips with. So Lucy has just returned from maternity leave. She came back on Monday, so we'll be starting with the process of planning for this audit. The short paper introduces three things effectively. One is the team, which I've just sort of talked through very briefly, and Kerry Lynn will be the assistant manager who is consistent with the audit from previous years. Second key thing is the audit timeline, which is on page 4 of our report. And the reason for bringing this here now before we've got the full plan is because we wanted to be able to sort of communicate with you really as early as we could in terms of our sort of starting process once now Lucy's back, what our proposed timeline is, so you can see transparently where we're heading to. So we're sort of starting with the basic planning now, with an intention to be sort of probably fully on site from, well, virtually on site from early October. For context, this particular year, and Casey sort of already referred to this, we have a slightly different profile. We weren't able to do interim work. We were still completing last year's accounts at normal interim phase. So effectively, the block of work we're doing now, going through to Christmas and reporting in January, effectively is starting from scratch. So it's proper full planning, the sort of systems work we normally do. We'll effectively combine our interim testing within sort of one whole package, and then deal with the final accounts work as well at the same time. And the timeline sort of provides sort of indicative dates for coming to committee with our formal plan, and also for the audit completion report in sort of roughly January time. One thing I would point out, and which is the third thing within this report, is just an outline about how use of resources has changed. We have sort of a fairly high level summary for what's going on there. And as a short story, the new Code of Audit Practice, which is effective from 1st of April 2020, so this 2020-21 financial year, changes the reporting and the scope of work. So previously, we were giving effectively a sort of binary, qualified or not qualified opinion or conclusion on use of resources, whether you were didn't have adequate arrangements, and there was different levels of potential qualification within that. What has changed for this year is that there is a slight sort of rebadging and tweaking of some of the criteria we have to look at, and one of the new areas is how the council will seek to improve value for money. So basically improvement activities, whether that's saving money or being more effective in the use of resources and getting more for your money effectively. So there's a slight tweaking of the criteria, which is set out on the next page in the report, but also the way we report things is very different. So rather than a very short qualification or not qualification conclusion, we now have a quite lengthy annual auditor's report replacing the annual audit letter, which is much more detailed and covers each and every criteria, whether there's issues with it or not. And the purpose is to identify if there are any areas of significant weakness that need to be highlighted, and if there are, for the auditor to make practical, constructive recommendations to address those. And what we've seen within the NHS is that rather than sort of a handful of pages within an audit letter, which we would previously have had, we're looking at sort of 25, 30, 35 pages worth of quite detailed commentary on arrangements. So it's a very different way of looking at things, a bit of a sort of a culture shock, I think. But what we'll try and do is sort of gently introduce that to the committee so you can see what's coming through, so your expectations are managed for that. And in that particular respect, the deadline for that work, because of the current state of the market and also the issues relating to COVID and the knock-on effects of that, is that there's effectively a rolling deadline for completion of that to be about 3 months after, or up to 3 months after, the issue of the audit opinion. And it's been very helpfully brought to my attention that if we were to report 3 months after our January deadline, we may be straying into your sort of PERDA period. So I think our intention would be to try and address that in our timetable to make certain that we can issue that report before it gets sort of blocked or unable to be sort of issued. So that's sort of a very quick sort of highlight about what we've got in terms of the timeline. I said next committee will come back with a full plan with the proper sort of identification of risks and what we're going to do about those. So again, you can see what we're going to do and why. I'm more than happy to take any questions on the short report we've got there, but as I said, I'm looking forward to working with you over the next few years or so. So thank you for your time.
Thanks very much. Councillor Ibrahim?
Yeah, sorry, mine's just a question on page 39 of the report. So you've got the comprehensive income and expenditure statement, and you've got one on one page, and then you've got another one on page 40, which is exactly the same, bar the calculation on the housing revenue account is different. Is there an explanation for that? I mean, on both of them, the housing revenue account is the only one in surplus, but there are different figures.
I'm just wondering whether
I think
to take questions to Mr. Eagles about the audit process and then maybe come back to Casey with any points. Yeah. Yeah. Just on the audit process, if I could ask a question about the timetable, because I noticed on the MHCLG website, they acknowledged that last year 55% of local authorities didn't meet their audited accounts deadline of the 30th of November, and yet this year they brought it forward 2 months, which, as Casey said, is a hopelessly unrealistic timetable that they've set. But yes, what you've set out for us, presumably, is there's a similar challenge facing a number of local authorities, if not the majority of them. But there are no consequences for us in the fact that we can't possibly meet their deadline?
No, I think realistically, I mean, as Casey said, I think it was disappointing, to be quite candid, it was disappointing to have a deadline set following consultation where I know that we and the other firms and key audit regulators, so PSAA and NAO, will have said that the end of September is an unrealistic deadline. So disappointed to have got ahead with a timeline that we've all said is totally unrealistic. And I think it's not too hard to work out that, you know, if we are still carrying on with quite a number nationally, not just BDO, but nationally, with quite a number of 2019-20 audits which are not finished. There are still quite a large number, surprisingly, of 2018-19 audits which are still ongoing. And we haven't been able to do interim work. Very few firms have been because of the pressures of trying to complete previous years. So to start from scratch and expect audits to be able to be done by the end of September is, I think, an unhelpful deadline. It gives a sort of false impression of where we should be going to. And I think my personal view is that the end of November would have been, in a normal year, would have been a more realistic deadline to set again, to try and see if we've got some improvement. In your particular case, given we weren't signing up until the end of April, even that is sort of quite challenging. We have to be realistic about how we sort of fit things in. So yes, it's disappointing that was set. I think it is fairly easy to see it's an unrealistic deadline, and what we've provided here is a realistic, achievable timeline, given the starting point which we have, which is no interim and only starting now, so that we've got something which we can actually comply with. And that's our intention, is to be sort of, you know, transparent and realistic, and provide you with something which you can genuinely measure against.
So we're struggling to hear. I think the stream might be on mute.
Page 39 is the single entity, so just the council. The second page is the group, which includes Alexandra Palace and Homes for Haringey as our two subsidiaries. So in the top left of that page, you can probably see it says group accounts. The previous page is single entity.
Sorry, Chair, we can't hear you.
Okay, I don't know if you heard Thomas gave an answer to the query. I don't know if you've got anything you wanted to add.
I didn't hear that. Is it the query from Councillor Ibrahim?
Yeah. So Thomas Skeen explained that the first page is about the single entity.
Yeah.
Council,
the next page is
and
for
the second
group.
page is the group. Yeah.
Yeah.
Councillor Ibrahim, do you want to come back?
Yeah, so my presumption is, if you're saying it's the group and that would include Alexandra Palace and Homes for Haringey, my assumption would be it's not to do with Alexandra Palace and it would be Homes for Haringey. But then I would expect the discrepancy to be bigger then, because it's not actually that big. So maybe I just need to follow that up with an email to understand exactly how that works, because obviously Homes for Haringey would have a bigger call on the housing revenue account than the discrepancy, in a sense, because it's only a small difference. I find that odd. I'll follow that up with an email if that's all right.
So as we've got here the draft accounts, I mean, yes, are there any questions here? I mean, if not, I guess Casey would take emails, but Councillor Emery, you want to raise something?
Yeah, it was just on page 143, which is the pension fund. I was looking at the three contingent liabilities that you've got listed on the left. Actually, there's four, but there's three going into 2021, because obviously you've got Aviva Lime there dropping off in 2020. So just wondering if you could just talk to me about those three options there. You've got Pantheon, Copenhagen Infrastructure Partners, and BlackRock. Just wondered if you can give a bit more detail in terms of what they are and what their what infrastructure they're related to.
Right, okay. Thank you, Chair. I'm happy to take that one if that's okay.
Yes, sure, Tim. Do you want to introduce yourself?
Good evening, everyone. My name is Tim Mpofu, and I'm the head of Treasury and Pensions here at Haringey. Thank you for your question, Councillor Emery. So in terms of the contingent liabilities that have been listed on that page, two of them are Aviva Lime. Aviva Lime is no longer a contingent liability because we've fully funded that commitment. So essentially what happens is when you agree to an infrastructure investment, you have to commit capital over a course of 3 to 5 years. They then draw down that capital. So for example, if you commit, let's say 50 million, they're not going to fund it fully in one day. That might take about a series of years before they get to that 50 million amount. So what you have in the contingent liabilities for this year is the amount that's still outstanding. So that's the amount that the investors, the fund managers can ask from for the pension fund to still fund. In terms of what's in the infrastructure investments, they vary. Most of them are in renewable energy. So I think Copenhagen Infrastructure Partners is purely a renewable fund. So they'll invest in solar energy across the world. So it's not just focused on the UK. It's mainly focused in Europe, but also they invest in other segments around the world. Similarly with BlackRock as well, that is a purely renewable investment infrastructure fund. But essentially, as you can see, the BlackRock is more or less fully funded. And then we still have some amounts that are still outstanding from Copenhagen. Pantheon is a private equity manager, and we just recently topped up our commitment, I think, a few years ago. But usually this is something that would be discussed in the pensions committee and board. But this is just for information, as it's been included in the accounts for members.
Thanks very much. Councillor Ibrahim.
Yeah, sorry, just to follow up what I asked earlier, I'm now even more puzzled because when you said the single entity is just the council and the group includes Homes for Haringey and Alexandra Palace, but the group amounts are less, not more. So it looks like when it becomes a group account, it's actually less than when it's a single entity. The expenditure is less and the gross income is less as well.
Thomas or Casey?
No, it's me. Sorry, Councillor Ibrahim, I'm trying to go back to that page. But what I have to say quickly before I get to that page is that because it's a group account, there's a way we consolidate group accounts. It's not, you don't expect to see, because it's a group account, you expect to see an addition, a complete addition, from Homes for Haringey, Alepale, you add them up and then it gives you that bulk figure you see there. Transactions between us and our entities are not highlighted, are not shown in consolidation of the accounts. So that might account for what you're saying. But I think if we can't take this outside here, if you have any particular line that you have concern about, we can give you the analysis of what makes up those balances there outside this meeting. Yeah.
It could be, are you saying it could be transactions between the organisation. See what you mean, possibly, yeah.
So if members have got other questions on the draft accounts, then can I suggest they email KC unless there's any other urgent points people want to raise now? Okay. Thank you, Casey, and thank you to David Eagles. So we will return to the audit plan at the November meeting. So thanks very much.
Thank you.
Let's move to agenda item 8, which is the audit and risk service update for Q1, page 177. Minesh, would you like to introduce this?
Thank you, Chair. This is the usual report that you get from me, setting out the work of the internal audit team and the fraud team over the first quarter to June 2021. Members may recall, just from an accuracy point of view, that I brought the annual audit paper to the July committee, and much of what I'm about to say to the committee was captured in there, but for completeness, I'll make sure you are appraised of the key findings. Starting from an internal audit point of view, a lot of the work for the last financial year was finalised in the first quarter of this year. In summary, for all the audits completed, 4 were assigned substantial assurance, 6 were assigned adequate assurance, and 4 were assigned limited assurance. The 4 assigned limited assurances were the health and safety audit, brokerage, and brokerage covers both adults and children's services, IT disaster recovery, and safeguarding, and the element of safeguarding audited related to management and the triage arrangements. In addition to those areas, there were 4 schools finalised. 3 of those schools were assigned adequate assurance and 1 was assigned limited assurance. And again, members may recall that I brought the annual schools paper to the July committee, which encapsulates the findings from these schools, and as well as all the other schools audited in that financial year. Just by headlines of the sorts of findings that led to those areas being limited assurances. For the health and safety audit, the key concerns raised by the auditors were that where people were trained, there needed to be an accurate record of the training. The council has a system for recording training, but it doesn't operate as effectively as it should. And I'm aware that plans have been put in place to try to change that system, and a new system is being brought in around December and January time, which hopefully will mitigate that risk. The second area related to the risk assessments. So the health and safety team have got and have created a good template for the organisation to use to help with the risk assessments, but the elements that the auditors felt would help embed that risk assessment was around guidance as to how to use that risk assessment, a central record maintained of all the services and the fact that they had completed that risk assessment, and then a regular review to make sure that any key issues arising from those risk assessments were followed up and implemented. The third point is around health and safety policies. So there are a number of policies that the organisation has in place rightly to guide and drive the work of the health and safety team, but many of these needed to be refreshed and brought up to date, and the service was asked to do that. Chair, I can pause there and take questions individually on each area, or I can just carry on and finish off on all limited assurances if that's...
I think there is a question coming, so let's take that. Councillor Ibrahim.
Thank you, Chair. My question is around schools and how internal audit assists schools with their own audit processes. I note that we've got 4 schools who were dealt with during this particular quarter. 2 things. One, what's the timeline to having dealt with all schools across the borough? and one of the schools, Stroud Green Primary, it says we have limited assurance. The direction of travel is it's getting better, but there are still 2 fundamental weaknesses and 8 substantial weaknesses there. So how does that give us that limited assurance?
I thought we were pausing for health and safety questions. I thought Minesh was going to continue with the rest of his report. I think he was pausing there.
I'm sure he mentioned schools.
No, indeed.
Right, so I thought we'd actually
that.
got to schools. So I'm sorry, Chair.
I'll invite Minesh to deal with that.
Thank you, Councillor. Thank you, Councillor Reggie, for. So your point around the audit cycle. All schools get audited once every 4 years as a minimum. But some schools are audited more frequently than that. And they tend to be the schools that have been assigned either nil assurance. And nil assurance means that the level of assurance we have is so low, and the recommendations tend to be quite a lot of high priority that it warrants another school visit for that to be done. For the audit to be done, I mean, or where there is a limited assurance, where, again, for the same sort of reason, perhaps not as severe, but for the same reason we need to visit the school again. In terms of the direction, I'm pleased to say that the number of schools getting low levels of assurance, i.e. limited or nil, has decreased considerably in the last financial year. Prior to that, certainly about 2 or 3 years ago, a large proportion of the schools audited were assigned a low level of assurance, and that led to quite an intensive program of work, both from the local authority and from the audit team, to help schools fully understand the requirements of what good financial management looks like, and to focus on the areas that the auditors would make sure and are tested as part of the program. What that entailed was the auditors meeting with school business managers, head teachers, governors, every 6 months to essentially set out the program of works and to induct schools and introduce schools to the regime that we have in Haringey. There is actually a meeting tomorrow of new head teachers that I'm attending, where I'll be setting out the standard that we would expect schools to attain when dealing with essentially public money in Haringey. So we think that that has made a big difference, but I think from my point of view, what I'd like to see is schools get to a point where no schools get low levels of assurance, and the financial administration and management is robust enough for us to be able to demonstrate that we are making good use of public money. And that is a continuing journey that we'll have to pursue.
If there are no further questions on schools, do you want to take us through the other areas that had limited assurance, Minesh?
Thank you, Chair. So I'll turn my attention now to the brokerage service. The brokerage function within the council assists both adults and children's services. We had previously audited the adult services, and last year's plan was to see the improvements that had been made in totality, but making sure that we looked at the brokerage function both from a children's and adults point of view. Both areas were assigned limited assurance for slightly different reasons. Turning to adults, the areas of risks identified were, first of all, the need for placement policies and procedures. This essentially is one of the functions of the brokerage service, to help place adults in places which are suitable and meet the needs of the service user. But they didn't actually have proper guidance which set out what that looked like. So we asked for that to be implemented. The need to make sure that purchase orders were raised properly at the start of assignments. That's just good financial management. The need to retain evidence of placements that had been approved. So there is an internal system whereby an officer determines what the placement should look like, and then the manager signs that off. We wanted to see evidence of that sign off because that wasn't always clear. The other area of recommendation was around making sure that as an authority we could demonstrate the cost of the placement and offer an evaluation of how that compared with other placements internally as well as externally with other local authorities. For children's, there were fewer recommendations, but we did raise one priority one recommendation. The three key areas were around, again, the need for that policy and procedure guidance for children as well. And the area for the retention of documentation, which was again found wanting. The one area of difference was that for the children's area, we wanted to see a system of quality assurance. Essentially making sure that where placements had taken place, that there was a mechanism for the brokerage team to satisfy itself that the placements were of adequate standard and to seek that assurance. So they relate to the brokerage function. Turning to IT disaster recovery, the key areas of audit findings related to one, the completion of arrangements and plans and for tests in case of a disaster. So what this relates to essentially is that the digital services team have actually got a response plan in case there is a disaster. But we found that the plan hadn't been tested as well as it should have been at the time of the audit. The second area was around how that response plan aligned to the council's business continuity planning arrangements, and making sure that whatever we decided to do in case of a disaster, and essentially what this is, as you can imagine, there are myriad of different systems that the council uses in all of its different functions. But in case of a disaster, it's really important to have a very clear and a prioritized plan that allows the IT service to bring up these systems in the order of priority. And we wanted to test and make sure that that priority listing reflected the business continuity arrangements of the authority. And the third area was around reporting of tests that have been completed. So where digital services have carried out tests, making sure that the findings from those are reflected back to services so that there is a better connection with the service in case there is a need for disaster recovery to be invoked. I think I'll pause there, Chair.
Thank you very much, Minesh. So can you just say those areas that receive limited assurance, you've identified the particular issues that need to be addressed. So what is the process for ensuring that action has been taken on those points, and how soon do you go back to check that those recommendations have been implemented?
Thank you, Chair. So essentially what we'll do is, having agreed the findings with the service and got the recommendations timelined, we traditionally go and revisit the audit area every 6 months or so. Sometimes sooner, sometimes slightly later, depending on the priority of the recommendations. So limited assurance areas, we will try to prioritize and go in slightly earlier. Those areas classed as adequate or substantial, we will see fewer recommendations, and therefore we will look to go there in a 6-month interval. In terms of reporting, members may recall that I brought the annual paper, and in the annual paper, one of the sections I had related to follow-up of the recommendations raised and the percentage of recommendations implemented. If the recommendations are not implemented when we initially do the follow-up, my process is to contact the director and raise that as a concern.
Thank you. Are there any questions to Minesh on those areas? Councillor Dogan.
Yeah, thanks, Mayor. So my understanding is that after 6 months that you're going to go back and find out about this IT disaster recovery. I think that's really important because the entire function is based on IT. As you know, that a couple of months ago, I think Hackney had a cyber attack and the entire system collapsed. So I think it's important to have this test sooner than later, and that will give you some sort of findings about, and then the reassurance can change. It's limited, it's quite low.
Wasn't there one other area with limited assurance, and that was safeguarding for adults?
Thank you, Chair. There was quite right. For safeguarding, our key issue here was the management and the arrangements for the triage function. And essentially, the key issue raised related to the audit trail to support how it is that decisions are made and how those decisions are then implemented. Thank you. Sorry, I'd forgotten about that.
That's fine. Are there any questions to Manish on that, or indeed on anything in the report from page 177? Manish, did you want to raise something?
Members at the last meeting asked questions about the language used in the anti-fraud area, and it related to the performance indicators for the work that the fraud team does in recovering illegally let housing units and preventing right-to-buy fraud. And the word target was used, and the committee expressed concerns about targeting, or the word target, for anti-fraud work. You'll see that I've actually changed that to measures. So these are not targets anymore. These are measures that we use internally to performance appraise our own team, but they're not seen as targets to achieve as such.
Yes, thanks for that. And on that point, can I just ask, on right to buy applications, in paragraph 14.9, you say there are 264 ongoing applications under investigation for right to buy. So is it the case that every application for right to buy is investigated, or is that saying these are the ones that have been identified for further investigation?
Thank you, Chair. So every application goes through a process of due diligence and is thus investigated. I think investigation is probably not the right word to use because at the first phase, essentially what we ask applicants to do is to complete a due diligence form, which is part of the money laundering regulations. We risk assess those, and if there are any areas of concerns from that, we will then carry out an investigation in those areas. But the initial request is to obtain information from people who intend to buy their homes, and that acts as part of the due diligence process.
Thanks, Councillor Ibrahim.
Could I make a suggestion that some of the language around that be looked at? Because, I mean, effectively what you're saying is 217, is it 17 right to buy applications are being considered as opposed to investigated. And I just think if you say that part of the consideration in, obviously people who are making those applications should expect that there would be due diligence, then that would, I think, would be better language to use.
Are there any further questions on that report? In that case, we move to agenda item 9, which is the Treasury Management update for Q1. So is that going to be Tim Apofo? Are you going to introduce this?
Yes, Chair. I'll be introducing this item. So yeah, this report is for members to note the Council's Treasury Management activity for the first quarter of the financial year. So that's up until the 30th of June 2021. And details of the report are included in Appendix 1 to the cover report. This report is from information only, so it doesn't require members to make a decision. But I would like members to note that the activities that are contained in this report are in line with the Treasury Management Strategy that was approved earlier this year in March. So there isn't anything particular in the report that I would like to bring to our members' attention. But yeah, Chair, I'm happy to take any questions from members on any of the contents of the report.
Thanks very much. Are there any questions on this report? Because can I just ask one question, which was about the periods for borrowing. So in paragraph 6.9, figure for under 12 months is 14.67%, whereas on the next page, short-term borrowing, the figure is 13%. I don't know whether I'm not comparing the same things there. Could you just clarify that for me, please?
Yes, thank you, Chair. So yeah, those numbers are slightly different. So in terms of the figure in paragraph 6.11, that short-term borrowing is what we call temporary borrowing, which is essentially taken out for under a year. So we tend to borrow this from the interlocal authorities the market, and we actually have a limit of that of 30%. So this 13% is below that limit. However, when we're doing the maturity structure, that includes both that short-term borrowing as well as any of the long-term borrowing that we've taken out in previous years. That's also maturing this year. So essentially, you have a little bit. The 1.67 is actually due to some of the equal installments loans that we pay back from the PWLB. So they're due to mature this year. So that's kind of included in that under 12 months figure as well.
Thanks very much. Are there any further questions on this report? So we're asked to note this report. That's agreed. Okay, thank you. In that case, thanks very much for your attendance. There are no urgent items of business. So date of next meeting is the 16th of November. So thanks very much.